like, I know it could save me a lot of money, but I have to invest this much to see how much it's going to save me. Whereas if I had some sort of like roadmap to understand what assets I should do in which year and what that might look like based on the basis or anything else, that would be pretty cool. I think that would be really helpful.
So another big kind of misunderstood thing is that that you have to do like the cost seg in the year of purchase. But actually, I'd say that like 40% of the studies we do nowadays are properties that were acquired in a prior year, and then they do a cost seg on it in the current tax year. So like example is they bought it in 2017 and kind of just did straight line depreciation up until 2024 or 2025. And then in 2025, they realized that they want to do a cost seg on it. Yeah, essentially there's a form that gets attached to your tax return called a change in accounting methods, which is that form 3115. Prepare a version of that to be sent to your CPA.
Interesting.
But essentially that form is saying, up until now you've been doing straight line depreciation. This is how much depreciation you've taken to date. So maybe that's $50K. If you did a cost seg on day one in 2017, you would have actually taken $200,000 up until now. So there's a $150,000 adjustment that's taken in the current tax year. So you don't have to like go back and amend the 2017 tax return, 2017 tax return. So yeah, it's it actually allows you to also time the studies a bit. So maybe you didn't want to do a cost seg up until now, but you do have that big tax hit because you sold a property. It allows you to say, all right, I don't have to go buy a new property to get a deduction. I can actually look at my existing portfolio. We had a good example of that this year. I would say several, but one that sticks out is a client that actually invested in like an opportunity zone fund a couple years ago. And the fund never actually invested in the opportunity zone. And then this year, he's going to realize all the gains that were going into his initial investment. And this was like 2 weeks before the tax deadline. So we, looked at his portfolio with him and his CPA, identified 2 properties that essentially would wipe out his tax burden for the year. So I think the timing stuff's really cool. Like in the future, we'd love to build some kind of like scenario analysis thing out where people could just essentially upload all their properties, share kind of what their tax year looks like, and like here's a couple options.
Right.
And that's kind of like, can just do that on their own at first, and maybe then they reach out to us after.
Right.
But I think, essentially we're starting at cost seg, but we'd like to get into some other things in the future.
That sounds awesome. And I think a lot of people who don't do cost seg is because they don't want to invest in it where they don't know what the outcome is going to be.
Right.
Because they don't understand it. Right. Yeah. And I would probably fall into that category to some extent where, like, I know it could save me a lot of money, but I have to invest this much to see how much it's going to save me. Whereas if I had some sort of like roadmap to understand what assets I should do in which year and what that might look like based on the basis or anything else, that would be pretty cool. I think that would be really helpful.